Good evening, everybody, especially viewers who have joined us today. I'm immensely happy to state that we have virtually assembled here on the Indian Conference on Artificial Intelligence and Law 2021 for discussing the topic, in fact, a very crucial topic: artificial intelligence and blockchain, need for reforms in Indian tax regimes. So, the significance of this topic arises out of the multifaceted changes taking place, leading to newfound challenges in the taxability of artificial intelligence and blockchain based goods and services. Not only this, but we also seem to see insurmountable potential where tax compliance processes and enforcement by tax authorities can be improved through the usage of these technologies. Therefore, in order to effectively understand the realities, the challenges, and the possibilities surrounding this topic, I welcome our esteemed and erudite panelists for today, which is Mr. Maya Nagappan, who is a leader, digital tax and social finance at Nishit Desai Associates, and Mr. Pallav Pradyum Narang, who is a partner at CNK Arkenko. So, as something in the beginning, and for the benefit of our viewers, I would sincerely request the panelists to start with yeah, showing how the current perspective looks like on tax application or the taxability of goods and services in India when it comes to artificial intelligence or blockchain based goods or services.
Hello, maybe you can start off and I'll add to it.
Sure. Thank you so much, Manoj, for the introductions. In terms of the spectrum and the landscape of taxation in blockchain and AI, it is as nebulous as the understanding of these particular concepts by our regulators. So the wonderful thing about emerging technologies is they challenge and change the paradigm of understanding of current concepts, and things that blockchain and AI are doing are sort of upending the system in a lot of established businesses across the world. That said, our tax laws evolve faster than we think they do. So tax laws have provisions built in, and the taxpayer has the powers to tax these as they like, at least at this particular point of time, with the benefit. So right now, if I were to look at the power balance, is on the side of the tax regulators as compared to the users of these particular technologies. This works in two ways. One, obviously the government is able to ensure that they get their revenues, but what this does is it remarkably decreases the concept that government has been working towards, which is the ease of doing business. Since businesses cannot plan, business do not know what stand the tax authorities are going to necessarily take. A lot of business models have to then be based on conjectures and surmises, which is not effectively a place that any business wants to be, having to work on assumptions as to which particular direction a regulator might take. So that, to my mind, it just is this space where we stand at this particular point in time. May I, if you want to add?
Sure, thanks, Pallav and Manohar. So I think on the question was relating to blockchain and artificial intelligence and the broad landscape as to where we are on direct and indirect taxes. So as Pallav correctly said, I think the technology is evolving, and I think most of the action is happening in the cross-border context. Like in the digital world, it's not just about a company having operations within India. I think a lot of these companies are also from all around the world. They have user bases in many countries. And in this cross-border context, I'm just anecdotally probably going to highlight a few things. One is, of course, let's say on the equalization levy is one form of tax which the government has tried to impose on these cross-border digital transactions. Now, of course, artificial intelligence services would be a subset of the whole digital services that are happening. Not all digital services require artificial intelligence or are driven by artificial intelligence. But of course, again, to take a step back and qualify what we mean by artificial intelligence is machine learning algorithms, which crunch through a lot of data. And you see this in your Netflix or in your Spotify when they do recommendations of songs or movies, right? These kind of services, I would say, fall within that bucket where they're driven by artificial intelligence, and this is the kind of cross-border services that the equalization levy tries to capture. Now, when you come to the GST side of things, right, the same kind of services get captured under OIDAR services, which is your online information database access and retrieval services. These are services that are primarily over the internet with minimal human intervention. So this is where I think much of the action has been in terms of trying to capture these. When we come to blockchain, for as a simple way to put it, is it's also run by decentralized organizations. There is no single person who runs a blockchain. It's a software that sits on multiple connected servers which nobody controls. Single person controls the equipment. Now this has created certain specific challenges in, let's say, for GST, for example. So if somebody is getting a blockchain service, right, and which is not really owned by a particular entity, so who's the supplier? Who's making the supply? Is that subject to GST or not? And there are certain kinds of transactions, for example, in the crypto industry where it's called staking. So if I have a cryptocurrency, I can stake it on the blockchain and I get returns in or rewards in cryptocurrencies for that. So am I supplying the crypto to the blockchain? Is that blockchain even a person? Are they a recipient of service? So there are a lot of questions where the law today doesn't really it's not evolved enough to capture these situations. These questions do come up, and we see a lot of these issues happening across the board. So a lot of litigation in space, and there's scope for regulatory and legal clarity on the tax side going forward as well. And I'll just take a pause there. One last thing on the custom side is, of course, the blockchain technology. Maersk and some companies in international shipping and certain countries have also used it to the technology. Of course, this is more on the administration side. I was earlier talking about the taxability and the different issues that come up. But on the administration side, there are successful case studies where blockchain technology has been used to record whether a particular good has left, for example, Sweden. Is it on a ship? Has it passed customs in India? Right? It's a very complex, multi-step process, and for shipping companies who are subject to customs across multiple countries, I understand that they have successfully used this technology to streamline the process where tax authorities in both countries can clearly see what has been paid at what stage and where exactly a good is in transit in that system. So, yeah, I'll stop.
That's
Interesting point
wonderful.
that you made there. May I, if I just might add on,
Absolutely,
the government
absolutely.
has
Please.
also the government has also utilized artificial intelligence to mine through income tax returns for a lot of taxpayers. Pardon me. And artificial intelligence is being employed by the government to hunt down tax evaders as well. So that's an interesting utilization of the technology as well.
Correct, correct. So thank you for your responses. And since the law does not seem to have developed at such a stage where it can support the entire kind of goods and services which are being supplied. So what do you think will assessees face in the future in terms of these technologies from the tax authorities?
May I, if you want to take this particular one?
Sure. So on, I'll
And
probably take a lead from what Pallav was saying last, which was on, I think the first wave of changes that the taxpayers can expect is more automation and usage of these tools by tax authorities, as Pallav was saying. Correctly, both, and no, it's not just the income tax department, even the GST department is also working closely with regulatory authorities. So there is a lot stronger sort of information sharing over the last couple of years between the various authorities to see where the gaps are in disclosure. So, for example, if you disclosed X amount of income in either your income tax return or your GST return and it doesn't match up, so that becomes a point for them to start an audit and do go down the trail. And we are increasingly seeing more audit actions based on shared information that's been coming through. The second thing is, of course, low level. I won't say entirely artificial intelligence, but digitalization is probably the basic thing where for example, self-filling of your income tax returns from details that are already available, scrubbing through, and even in the audits, right? So I think these are a couple of things that taxpayers can expect. In terms of actual AI tools that tax authorities are probably using in the back end, and just to give you an example, today there are a lot of people trading in crypto through these exchanges, right? And they are voluminous amount of transactions. If you see and for a tax authority to go and audit it person by person and connect it across multiple exchanges and see whether whether the PAN numbers match, who's actually done how many trades, have they disclosed all of it for taxes. I think it would be impossible for an officer to sit and actually collate all of it. So being able to process all of that data and using AI assisted decision making to see who to actually investigate might become more prevalent and necessary going forward, keeping these sort of technologies in mind. Over to you, Palav.
Thanks, man. So I think, as May has already alluded, the departments and regulators are already utilizing a lot of these technologies to find out people who are engaging in transactions within crypto and cryptocurrencies in particular. That said, the other thing that also the departments are doing is changing regulations in order to enforce more what do you call it? Disclosures on account of the taxpayers. So you see, in terms of, for example, we saw a recent amendment in the Companies Act where companies transacting or holding crypto will have to separately disclose. There are similar provisions being brought forward as far as other regulators are concerned. Where any cryptocurrency transactions and holdings will necessarily have to separately disclosed. So on one end, you have a proactive measure in terms of the regulators trying to utilize these very technologies to find out if any income has escaped assessment under direct or indirect taxes, and at the same time they're also using the changing regulations in order to have a self disclosure by individuals or companies transacting in these particular cryptocurrency transactions in order to catch them out if, let's say, they haven't disclosed or paid tax on it under one regulation.
And to add to that, as an anecdote, if I recollect right, I remember reading somewhere that I think a tax officer had, in terms of figuring out whether there was certain undisclosed income, they compared the income tax returns of a particular person with that person's Instagram and Facebook profile to see, whether they were traveling and how are you affording these holidays if this is your actual disclosed income. So I think, as Pala was saying, I think even on the collection side, as an administrative point, I think it is becoming more data oriented, where all these TCS and TDS provisions that under GST and an income tax they keep bringing over the last few years is really focusing on collecting data on whether the ultimate supplier or the person making the supply from an income tax or from a GST side is actually making the full payment of taxes or not. So it's even in terms of audit and scrutiny, I think it's not every case that the tax department picks up. It is there is a lot of AI software used to understand which cases to selectively scrutinize, high value cases where there is a mismatch in sort of the information that's been collected from different portals,
or which are above certain key risk threshold defined by the income tax department.
Okay, so
yeah,
thank you for your
interesting point you mentioned there, Maya. So another similar case that comes to my mind is a recent case related to agricultural income. Certain individuals had declared income from agricultural sources, and interestingly, the department got remote sensing data from ISRO and looked at the exact land pattern and saw over a period of time that there was never any cultivation done on that particular land and it was always barren, and thus concluded against the SSC in that particular matter. So our contrary to popular perception, our regulators, specifically revenue regulators, they are very keen and enthusiastic in terms of adoption of technology as long as it helps the cause of collecting more revenue.
So, taking this conversation forward, since you have highlighted specific examples from practical experience, what kind of levy of tax or classification or valuation issues will be faced in the near future? I mean, anything from your experience? I mean, where would something like a non-fungible token be classified? I mean, this is still there's a lot of gray area on this.
So so for example, I think cryptocurrencies, we've all of us have been seeing cryptocurrencies, shoot to the moon and back, right? And the enthusiasm as far as cryptocurrencies has gone up significantly over the past few years. But we still don't have clarity from a regulator side whether cryptocurrencies are goods, whether they're services, or whether they're, they're property, for example. So this is an issue, that is not just going to be faced. This is an issue being faced by SSEs who are trading in these cryptocurrencies, and also individuals or companies who are building products on blockchains, for example. So if, let's say, I'm utilizing the Ethereum blockchain, I have to gas the blockchain. I have to buy gas, for example, in order to be able to use the Ethereum blockchain, and I have to make that particular payment in Ether, for example. Now, when I make that particular payment, is it how am I supposed to understand the purchase or sale of that particular Ether token? Is it going to be a sale or purchase of a capital good? Is it akin to a currency that I'm buying or selling, or is it property that I'm buying or selling? And these are questions that frankly nobody has a definitive answer to. May, if you want to add on the indirect tax side.
Sure. So, I mean, same issues there on the indirect tax side as well, whether it's a good currency. If it's currency, it's out of GST. If it's a good, then, and when you're trading one crypto to another, whether it's a barter, there are two supplies. There is a whole host of issues that do come up. And also the challenge with crypto is, of course, on the valuation side, there are, even within the same country, each platform has a different price for the same crypto, and across the world there is no consistency in the value. So how do you peg it to a value, even if you want to disclose it for GST or income tax purposes? Becomes a complex exercise, because, as Pallav correctly said, there are no guidelines regarding this. But also, quickly to touch upon on the AI side, some issues that have come up is, for example, there are increasingly funds that are quant funds that are being managed through AI softwares. Now, the beauty and the problem with AI is, because it's also data driven, nobody actually knows what goes into the decision making. So you don't know whether what was the reason behind a particular investment decision or not. But what's interesting is, earlier there used to be issues around whether fund managers located in India create a permanent establishment or things like that. But what happens in a quant fund, where it's not the manager who's taking the decision, but it's the AI that's taking the decision? So on the tax side, it's not something the law has gotten into yet, but I think those kind of questions could also pop up in the future.
And this is a very interesting point that you brought up, Mia. The thing with AI is, that it's code, right? And if, let's say, it's based on an AWS server array, where exactly do you say that the server is located? Whether it's within India, outside India, if there are redundancies built into AWS, for example, and a server is located in India, and if a North American server goes down, the Indian server picks up the slack. Do you then say that this is now a permanent establishment created in India because a server has been activated in India? So these are all interesting challenges as far as AI is concerned, and yeah, as tax practitioners and as individuals in this particular domain, this is exciting times to be in, definitely.
Yeah, and that reminds me, the same problem is also there with crypto and digital assets, right? And on blockchain in general. Where do you locate the crypto or the blockchain? And being a global sort of a network or a platform, that becomes an issue on the indirect tax side for, let's say, is it IGST or is it CGST? Because is it intrastate? Is it across country borders? So that becomes also difficult to pin down and actually discharge GST on those transactions.
Okay, so thank you again for your responses. It's been quite interesting up to this point, and so I've noticed that one under-discussed area when it comes to tax and technology is the import and export of services when it comes to technology-based services. So, would you like to say something about these things from your own professional experiences?
So I'll take this one first. So there are two interesting elements, right? One, when we talk about services, there is one service, in terms of coding or developing products to go on a particular blockchain, right? Which is analogous to any other development activity that goes on in India. For example, the likes of HCL, Infosys have been doing for donkey's years now. And that I don't think there's any differentiation in terms of how they're going to be taxed as compared to other services that these standard vanilla services that these companies are providing. So in effect, what you're doing is you're developing a code base to go on a certain blockchain. So I don't think there's any differential there. And then in terms of actual utilization of these particular blockchains is, again, you go back to what Maya was talking about earlier. You know, how do you even conclude that there's an export or import happening when you don't know the location of that particular blockchain? A blockchain by definition is decentralized. There are nodes in India, there are nodes outside India. Now, if let's say a tax officer were to conclude whether a particular blockchain is resident outside India or within India, would they do a manual survey of how many nodes are active at a particular point of time, how many were residing in India, outside India, and then conclude whether or not this is an export or an import? I think this is something that nobody really has an answer to at this particular point of time, and that's what the decentralized world does to regulators at the end of the day.
Yeah,
Maya,
and
if you
to
want to
add
add.
on the export and import of digital services, and as I said, a subset of that is the AI-driven services. Is I think has been a hotly contested topic for the last 4 or 5 years in the international tax sphere, which led to the imposition of the equalization levy. So I think to take a step back,
And the
how this
SEP
works.
rules as well, by the way. Yeah.
Sorry, which one?
I'm saying, and SEP as well, right? The concept of the
Yeah,
SEP.
and SEP and significant economic presence provisions as well. Yeah. So I think what's been happening is that 5 years back, I mean, to take a step even back into 2008, crisis happened. All these governments woke up and said, we don't have enough money. Where's, we need to collect more taxes. Who do we get it from? So it became a kind of realization that all the big tech companies, the MNCs, are not probably paying sufficient taxes in all the jurisdictions that they operate. Now they collect data and they probably monetize it through their AI-driven softwares and algorithms. So but they don't have a physical presence in most of the countries they operate in, and that means that their income doesn't get taxed in those countries where they have users and from whom they collect the data that drives their their algorithms. So this is what has been 5-6 years back. This has been debated. India has been pushing for this kind of income to be taxed in India, pursuant to which equalization levy and another provision, the significant economic presence provision, has been passed, where basically if a foreign company has more than X number of users in India, then or has more than X value of
Or
transactions that are
X
coming
value
from
of
India,
yeah,
then both will get
total
taxed
transaction.
under that. Yeah. So now the interesting thing is that compared to when this conversation started, and is that we were kind of like a more of a net importer of these digital services, I would say. But what's changing now, and the landscape that is changing, is we are also becoming a net exporter of such digital services. And there are 2-3 kind of specific things I think want to point at. One is our software as a service industry is booming. I think they're expected to bring in more than 2, 3, many trillions of dollars over the next 4-5 years, and increasingly every other country, if there is a negotiation going on for a global deal, it looks like it will go through. But if not, then every country may pass their own version of an equalization levy, and domestic companies may end up having to face these sort of levies in other countries as well. Secondly, more of the AI related stuff that are happening in India in terms of export and import of services is our own edtech companies and gaming companies are also coming of age. And a lot of these are, especially on the edtech side, these are AI driven or AI assisted sort of services, where these companies provide services that help teachers to provide training and teach students, and their income from rest of the world compared to from within India is increasingly becoming more. And also on the gaming side, we are actually seeing quite a bit of both Indian companies exporting services to a global user base and a lot of gaming companies seeing India as a big market for them. Although on the regulatory side, there are challenges. So that's what I would see as primarily happening in the AI driven or cross border import export space. And this brings with it GST, equalization levy, and other sort of bigger questions on the tax side with each of these transactions.
Okay. Yeah. So moving on to my next question. Uh, we seem to be moving towards automated tax collection, maybe eventually in some years. Now, as practitioners, we often face a lot of difficulty in getting refund for our clients, looking at the litigation landscape in India, where cases can go on for n number of years. So, when let's say if an arbitrary collection of tax takes place and we have to get basically refund for our clients, do you believe that this is going to increase litigation in India when it comes to tax disputes? Because the tax was never supposed to be collected at the first place, and maybe because of wrong interpretation, uh, the process has taken place.
This is an interesting one, by the way, Manohar. So first and foremost, when let's say we talk about tax collection, here one has to determine who's collecting taxes, whether they are bound to collect taxes for transactions happening in India or not. Again, thanks to the decentralized nature of the blockchain networks, whether or not entities who are engaging in these particular transactions are actually in India or not, whether or not they are bound by Indian regulators to be able to deduct taxes or not, is the first question. Assuming, let's say, these tax reduction activities are happening, or tax reduction is happening on crypto platforms which are registered in India or are compliant with Indian regulations. Again, then again, if let's say taxes are deducted, if it's just a matter of, I look at it in both ways. If it's just a matter of reconciliation between what was to be deducted, what was actually deducted, and then fighting it out with the tax department, and then that's something that we've seen in different flavors, in many other industries. So that will not be a new challenge for either practitioners or for assessees to handle. Now, if it comes to whether or not this TDS, if let's say it's deducted, an interesting scenario here would be if let's say tax is withheld by a foreign country, and then and then this tax is then you try to get rebate under Section 1991, which is foreign tax credits in India. Whether or not that's going to be admissible in India or not, that's a larger question that comes to my mind, and I think that is something where more controversies are going to arise rather than just a plain reconciliation problem. May I, if you want to add?
Yeah, so I think every time they have the tax department has tried to roll out more technology oriented solutions, right? For example, even recently in the news, the tax portal with Infosys, there's been a bit of an issue, right? I mean, I think the moves are happening in the right direction, but there will be technical challenges and there will be issues which require human intervention and solving going forward. I don't think we have reached that level of digital infrastructure or literacy where it happens so seamlessly yet. I think we're still some time away from that. But I mean, the drive is definitely there to push the system in that direction. So, I mean, a lot of other countries like Estonia, a couple of these countries in Europe are all far advanced down this path. So it's not like it is not doable, but for a country of our size with the number of transactions and people, I think there is a certain level of robustness that will be required to make it work seamlessly.
Okay, thank you for your responses. So there seems to be a school of thought which has come up with this concept of robot taxes, looking at the fact that automated processes are going to soon maybe replace employees or replace the need for human labor to exist. So, do you still think that it's more of a subject of science fiction, or are we somewhere closer to uh, achieving something like this?
So I'll take a stab at this particular question first. I think we're already at that particular position, right? Wherein a lot of processes, I mean, one obviously you talked about automated processes. Even the outsourcing industry, for example, which was the leading, revenue foreign exchange revenue generator for India some 20 or 15 years back, has now been appended, so to speak, by this robotic process automation, which basically means that that a lot of these processes or tasks which were outsourced to India earlier would now get solved in the cloud, so to speak. So that is happening, so and I think a lot of these AI driven activities are going to append human labor, at least starting with smaller tasks, repetitive tasks, as we speak. So there's no denying that a shift is underway. Now there are two aspects to it. One is the ethical aspect, and I'm not talking about taking livelihood away from individuals, and I'm not debating whether or not that's correct or not. What I'm From an ethical perspective, I'm debating if, let's say, India were employing 100 people, and suddenly an Indian company develops a robotic automation software which is able to do a task of 100 people, using this particular code base. Now, in terms of tax revenues, does India lose out? Do these individuals, and they would have had to pay certain taxes on the incomes that they make. There's a net tax collection difference. One could argue, that what the company saves, the company obviously has to pay tax on the profitability of the company, and what the company saves by paying these 100 people, the company will obviously have to pay taxes on that particular amount. So, but again, when you look at the numbers, individuals are on a different tax bracket, companies are on a different tax bracket. So that is sort of an ethical dilemma. Now, in terms of taxation, in terms of pure taxation, I think there are measures already underway. So we talked about equalization levy and significant economic presence regulations, which basically are checks and balances on these very or AI or algorithm enforced or algorithm, what do you call it? Enabled, rather, algorithm enabled movement of functions from one country to the other, and then allowing the country of source to tax the revenues being generated out of these particular activities. So there are safeguards in place. I mean, obviously, there are certain thresholds built in, thresholds that Maya was talking about, of certain revenue figures and certain user base as far as India is concerned. But yeah, I mean, we're seeing the shift happen, and I think there are the change is actually actively underway. And tax regulators have also wisened up to it. Yeah.
Sure. So I think this question on robot tax is like similar to green taxes that are imposed to incentivize or disincentivize certain kinds of behavior. And as Pallav said, if your intent is to ensure that labor is employed more than and is not replaced through machinery or investment in robotics, I guess then a robot tax may become a political issue at some point in the future, hypothetically. But otherwise, I think maybe part of the question you asked also seems to deal with, are we going to tax robots, and not necessarily in the sense that there are interestingly, a couple of weeks back, there are applications made by AI softwares in conjunction with actual people, saying that they have come up with the artwork, and that they have submitted to the registry as co-authors. So the day we start having separate legal personality for AI. I don't think we have hit that level yet, and I think to get that to that level of general AI intelligence is still quite a while away. But if the AI is a separate legal personality and can have streams of income and or own assets, etc., then I guess taxing them as a robot may become true. But I think we are still very, very far away from any of either of these two becoming reality, at least for the next decade or so, or even longer.
Okay. So, since we seem to have discussed a lot of challenges, let's move on towards the possibilities and the reforms segment. Uh, so, would I mean any of you? If it would really be nice if you could lay out a roadmap or sort of give suggestions in respect of what can be done now in order to improve the entire taxability concept or improve the laws which are currently dealing with tax, so that they can effectively tax goods and services.
I think tax is just an aspect of it, right? From as far as regulations are concerned, I think India as such has to come clean on cryptocurrencies, and regulators have to take a stand in unison as to where they stand. The RBI, for example, can't seem to stand cryptocurrencies and wants to regulate cryptocurrencies as much as possible. The Supreme Court, obviously, in the case of IMAI, has come down strongly against RBI stand. So on one hand, you have one regulator who's involved in foreign exchange and import and export, enabling export and import of these particular cryptocurrencies and money for the cryptocurrencies, in coming down hard on cryptocurrencies. On the other hand, income tax authorities seem to say that we don't really care where you earn this money from as long as you pay tax on it. Now, you know, again, there also, the tax regulators have to, take a stand as to what treatment are we going to accord these cryptocurrencies, because more than just cryptocurrencies, what we're looking at is, cryptocurrencies right now are, sort of a flash in the pan, or at least, the flavor of the day. But if you look at blockchain as a larger picture, and, I mentioned Ethereum and gas for Ethereum, for example, with these regulations, what we're doing is we're in a sense stifling innovation and access to these cryptocurrency or blockchain networks. So if, let's say, I restrict access to a certain cryptocurrency, what I'm also doing is restricting access of developers, etc., to that particular blockchain that underpowers that cryptocurrency. So that could be a very restrictive feature and could hurt India from an innovation perspective, which is something that India doesn't really need at this particular point in time. So the regulators need to really come clean, and maybe have guidelines in place, which will be able to help both industry as well as the regulators play on a level playing field, and help the industry grow, because there is nothing that helps industry more than certainty, and tax certainty is definitely something that helps companies, individuals plan out their future a lot better.
Yeah, so I think in addition to what Pallav said, in terms of compliance, of course, there is a large scope for both on the helping the taxpayers and also on the audit side, where clearly there is already artificial intelligence that is being used currently, and there is scope for making it more efficient and scale as well. But there are some challenges when with respect to both AI and blockchain. I guess my one of my concerns would be around privacy, because all this data sharing, right, under the privacy laws, you collect data for the specific purpose for which it is collected, and you don't really are not allowed under law to use it for another particular purpose. So when you collect data for GST and then you are sharing it with the tax authorities, you collect it for regulatory purpose. I'm not entirely sure where that would stand in terms of being compliant with the requirements under the privacy laws. Same issue with blockchain technology is also that the immutability and the transparency is that you can't really you lose privacy by putting all these transactions in any form of a blockchain, right? So whether it's a government run internal blockchain or whether it's a public blockchain, right? So that could also be a downside or a concern to keep in mind while these technologies are taken forward by the tax department. So while there is great potential, there is also certain things which need to be considered carefully while taking it forward. Yeah.
Okay, so thank you for your suggestions. So, may I request you all to say something on a concluding note, or if there's anything else you would like to add? Please go ahead.
So there's one other thing I thought I should bring up, which is what's happening in the US or in UK specifically. Actually, some of these countries, what this is kind of revolutionizing the way tax advice and tax work is being done, not just on the department side, but also on the advisory side. Which is softwares are being AI is being increasingly relied upon for automated review of contracts. Picking through specific portions of contracts and helping advisors kind of focus on the most relevant points and not, it cuts down the number of hours required to review bulky documents with lots of clauses and drafts in them. um, Two interesting use cases I thought were was one, and I think maybe even the department is using this in one of the countries, if I recollect right, which is to assist with categorization of certain kinds of trusts based on what clauses are used in it, or making or checking whether certain expenses are actually available or can be claimed as expenses or not. And this is all based on certain standard language or the machine learning software that has learned through processing multiple different contracts and coming to a conclusion. Of course, it is expensive to train these kind of tools when we are talking about making sure the accuracy is good. It just can't be fed data and left. It is actually trained by an expert to get to that level of accuracy. We may face challenges in putting in that kind of I mean, the cost may be significant for us to try and do it here, but typically what I've seen is we are like on the technology side 5 to 7 years behind on these kind of technological changes. So I won't be surprised if in the future, if these kind of tools are used both by advisors and tax authorities in terms of at least certain items of classifying transactions or claiming expenses, how it is translated to the Indian context will also be uh, I mean, it'll be interesting to see, because one of the important things is availability of clean, accurate, reliable data, right? So that becomes a challenge in India compared to other countries comparatively. So that's the one other thing I thought I should mention that I see as a development that's happening in the space.
Okay, so Pallav, do you have anything to add, or maybe we can move towards?
Yeah, so
Yeah.
interesting points made by yeah, so uh, a lot of the drafting work that lawyers do, interestingly, is also going to be, mm, hived away to AI, for example. So we're in science fiction, so to speak, right now. And I just wanted to briefly touch on one thing that we haven't touched so far on, is basically NFTs. And NFTs are, again, one of the hot topics as far as we are concerned right now. And today in India, we haven't seen, too many NFT tokenization activities going on, but you are seeing a lot of tokenization happening in the US. Speculator bubble, yes or no, I will not comment, but definitely an interesting area for regulators to look at, and for us as tax practitioners to advise our clients as well. Again, the same questions that we have on cryptocurrencies, similar questions arise here, except we're just looking at the broad framing of NFTs, whether they're assets. For example, would you call NFT artwork? If let's say you get a Tom Brady's autograph, one of one, uh, on 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 his website. But is it an asset? Is it a service? Is it an artwork? What do you consider it? If you sell it, what are the capital gain implications that you might have, for example? And if you're storing it, if you're retaining it, what sort of disclosure requirements would apply on you from an income tax perspective, for example? A simple thing, would you be even allowed indexation on an NFT if you sell it, 5 years down the line? And these are questions, that will come up, and as these these technologies and these particular tools get wider acceptance, we'll see more either regulation or definition by way of litigation. So an interesting era definitely to be in. It's sort of like the wild west, where regulations, are trying to keep up with the the hectic innovation going on. But yeah, interesting times for sure.
Okay, so with that, I believe we've come to an end of this session. I am extremely grateful to both of you for spending your valuable time to come and give your observations, views, and perspectives in this session. I am also thankful to our viewers, and I'll request them to tune in for future sessions being organized in the conference. Thank you.